Ladies and gentlemen, my name is Daddy Blessing. Welcome to EE PoweTalk episode 105. And as it is the norm here, we dive deep into conversations without giving briefs whatsoever because we are looking for authenticity. And today I'm privileged to host the founder and CEO of Finances, my good brother Teddey. What tuende mbali? That's your camera. Salimia watu wa nyumbani.
Hi guys. Hi mom. I made it. Guess who's on TV now?
So you introduce yourself and tell us just a little bit about Finances.
Yeah, all right. So it's an honor to be here. Thank you for having me. My name is Teddey Muthoka, founder of Finances Africa. And it's so interesting when you tell me about Finances Africa. And the main objective has always been one thing, to offer financial education that is simplified, that is relevant, and that is organized. Mm-hmm. Yeah, I think right now in the information age, there is so much to know, so much to do, but so much that is scattered and not in a structured way. So that's all about Finances Africa. But beyond that, I'm a kingdom citizen. I love the Lord, and just in the business of making people wealthy. Mm-hmm. Yes.
How do you balance between matters of kingdom and matters of money?
They're not inseparable. Yeah, they're not inseparable because, you see, kingdom is a way of living. It's like a blueprint. You see when the word says, seek first the kingdom, it's loosely translated to mean seek this way of living and seek this righteous or this right standing with the king, who's the Lord, and all these other things will be given unto you. And one of the things that Finances really focused on is that kingdom mindset, where you get to learn principles that cut across life, how you live in this particular kingdom. And one of those fundamental principles is really around wealth, you see. So the moment you understand there's a king who is obligated to provide to you resources in the form of wealth, in the form of money and all that, you understand that there are some principles that you need to heed to so that you fall in righteous alignment. And now all these resources from him come your way. Mm-hmm. Yes.
Now. So it's much easier to strike a balance from your end because you understand these principles.
Yes.
But there is a person out there who really, when you can't mention money and matters of religion in the same sentence.
Yeah.
When we were having a discussion on Reclaim,
yes,
there are some of the things that were predominant.
Yeah.
People having a difficulty being professional and being people of the kingdom. So now, how do you make it easy for a person who is in the kingdom to start now looking at wealth differently?
I think one thing that probably has been an issue of contention is that separation of church and state and professionalism. But when you really dive deep into scripture, there's one thing that the Bible says, that it is Christ who created all things. All things were created for him, by him, and through him. All. Media, all. Money, all. Military, all. Everything. He has divinely orchestrated it to be some of the things that we can get to live in and work in. And I think for the most part, we have dissociated it to think that the place of religion, which I don't want to call it religion, it's the kingdom way of living. It's not tied to Sunday, but it's where you receive your blueprint. How do you get to do this? Something interesting I was actually watching today, just getting to see a snippet by Pastor Nathaniel Passy on Hallelujah Challenge, I think back earlier on in the year. And he shared something about the price of gold. And he was like, this year, you guys, I think I've received a download from heaven. Look into like gold and just get to start investing. And I believe back then, that was February, I think it was around $2,000 and something. Right now, for the first time ever, gold has crossed over $4,000 per troy ounce. What does that mean? It means that you are not separated from this way of the kingdom to just doing your own things, because it gives you a blueprint, gives you guidance, gives you direction. This is how you build. Because if you don't have that, then what are you using to build? You're copying someone else. It's like two blind people following each other. Because they saw DB doing this, then I will do this. But is that the best way? Is that the divine blueprint? Is that the infallible way to which I can build this enterprise, build this business, build this career that will be able to last for generations and generations to come? When you look at companies like Chick-fil-A in the US, companies like Coca-Cola, companies like Walmart as well, when you check and you probe the founders really well, you notice that they never really followed the script of someone else. They had a divine blueprint that they heeded to and they followed. And that's why you're getting to see the successes that they've had over the years. Yeah.
Now, I'll dive deep into a very controversial topic around money.
All right.
Financial freedom. Because that word has been thrown around like 1,000,001 times, especially where everyone wants to understand how money works.
Yes.
What is financial freedom?
So financial freedom simply is the ability to be able to fulfill your life purpose without being constrained by this resource called money. Other people can loosely say it as the ability to live the life you want without worrying about your next income. Others can loosely translate it to mean this is the amount of money that you need, or maybe the amount of money that you can make while you sleep without having to necessarily work for it. You know, and I think even before we jump into financial freedom, I think there's something fundamental that we need to understand, and that's the difference between a work and a job. Yeah. So most people usually argue that I want to stop working, but the thing, work is more of purpose. Job is just something you get to do. You see, so there are people so there are people who are like, I want to leave my job, but it doesn't necessarily mean that you stop working. You see, for example, for you to show up here, it's easy for you to do this because you're working, you're in purpose. So even when you're building financial freedom, for example, it's giving you the leeway to do more of this. And not necessarily to say that I am held up in a job somewhere, I'm in a media company somewhere in town and I need to leave by 9 p.m. When will you have the time to do that? So I would also add, and it's now coming, that financial freedom is a freedom that you have from a financial standpoint that allows you to pursue the purpose that God has given you. So if you're called to even like build businesses, it's much easier for you to build a business when you have a clear mind, when you're not burdened by financial pressures. Yeah, so that's what I would loosely translate financial freedom to be.
Now, is there a figure?
Is there a figure? Yes. I will say yes. Yes, because there's something I've been learning recently, and it's called your freedom number. And I've been handling at work, and probably for those who don't know, I'm an investment analyst at Nabo Capital, one of the investment firms in this country. And we actually had a staff training around it, and we're being taught by a CEO bias about having your freedom number. And your freedom number was, what is the annual or monthly amount of money that you need that will be able to run your life without you necessarily working for it. So say, for example, if my monthly expense is like 50K, for example, I will multiply that by 12, all right? And I'll also get to share this formula after the session so that you can just share with the guys. So you have your annual expense, you multiply, say, by inflation. So inflation right now is around 5%, and then you extend it over like 30 years. And then now you divide it by the amount of return that a relatively simple investment opportunity will be able to give you. That number that you get, that is your financial freedom number. So, but also to remove the math, say, for example, if you're looking at just a simple way of understanding it will be, what is the amount of money that you can make passively per month that is able to take care of your life? That if you're to wake up DB and you're to do nothing, you know that by this amount of passive income that is coming in, this amount is able to take care of my expenses, the school fees, and whatnots. Yeah.
By definition, what is passive income? Because you've said it.
Passive income. So passive income, I will say it's, if I may use a good way of saying it, is this is money that you make while you're sleeping. This is money that is earned from resources that you already have, that you have given to other entities, and you get a return. And that's pretty much the the logic behind investments. So what that means is I have this pool of resources that I have. So give or take, say like your 1 million bob, for example, there's someone or different entities that need this 1 million. There's probably the government and they need it through like government bonds, for example, probably a private or a public company that needs this 1 million. So you give it to them and they give this capital back to you in the form of interest or dividends. And so the way you fully aggregate that amount now becomes this collective pool of cash that you get monthly. And that's what's able to take care of you.
Is there a formula when you're approaching investment, maybe for a first time?
For first timer, formula, I will say yes and no, but heavily on yes simply because you just need to understand two things. And it's a journey I've been on over and over again. One thing, you need to understand what money is and you need to understand its power. At the end of the day, when you really think about it, it's all about the flow of capital. You have what I need and there's someone who has what you need. The reason as to why a client will come, it's because you have a service you can offer them and the best way they can remunerate you is through money, right? So when it comes to investments, is you need to have that mindset in place that at the end of the day, there are different entities that will be in need of this resource that I have. So it might be a private company. They're like, okay, so we are looking at, say, for example, raising money to expand our business. How much are you willing to lend to us or give us in the form of equity or what we call shares? You know, that we can be able to invest or scale our venture and then we get to pay you back as time goes by. So that's the primary understanding that you need when it comes to investments. So second, now it's going to be which are the systems or the structures or the mechanisms or the vehicles that have been in place over time that you can get to plug into. You see? So you're like, okay, so I hear there's this, I hear there's that. So what does that mean? This means this means that. This is how it benefits you. This is how it helps you. This is how this party uses your capital and this is how they pay you back at the end of the day. And you see, with that, we've removed all the jargons, you know, like your infrastructure bonds, your shares, your whatnots. That's simply the whole understanding. It's just different forms, but at its fundamental level, there's someone who just needs the capital you have. They need to put it to work and they will compensate you for the inconvenience that you have experienced because you've given them their capital.
From an analyst standpoint,
Yeah.
what are some of the greatest mistakes or some of the things that new investors or people who are getting to invest for the first time greatly overlook?
Interesting. So many. I think one is just a lack of understanding. A lack of understanding and a lack of patience. Yeah, I think the people who really come into this are like, I've heard about this, I don't know what it is, but I want to do it. And I want to do it now. And more often than not, I've found that those are the people who really fall into investment scams, pyramid schemes. You know, if you sit down and someone tells you, Bethuke kado hapa, for example, you know, you'll earn like 30%, you'll double your money in 5 days. Like what? Shika, you know. But because you lack understanding, because you do not fundamentally understand how these things work, eventually you lose out on it. And again, that also speaks now to the patience bit, where you are not patient enough to understand how this particular system works and how it's able to benefit you over time. You know, one of the greatest investors, Warren Buffett, says that compound interest, I believe it's him, either Einstein, I'm not wrong, if I'm not wrong, but they say that compound interest is the eighth wonder of the world. And there's so many people who come into it because you have seen someone's successes at this point in time, forgetting that probably they were doing it for the past like 10 to 20 years. You know, so you feel like I need to get it now. But then again, you forget the process that you can start now, but if you're patient enough, in the next 5 years, you'll have gained so much ground. It's like someone who says 5 years is a lot. COVID was 5 years ago.
Yeah. Just the other day.
Just the other day. You know, like, 5 years is too long. I mean, so what have you done in those 5 years? So it's the discipline to steadily grow wealth over time, you know, and yes, you can have other opportunities that will be able to bring in much more impact and capital. But if you're really looking at longevity, principles are principles. You know, the deeper your foundation is, the higher you'll be able to rise and stand, even when it comes to investments. Yeah, so I will say those are the two mistakes that most new beginners do.
What of speculative investments?
Mhm.
How have you seen? I mean, have you encountered them, or is it a problem that you've seen maybe in the market? Because I see people, because of a certain speculation or a certain rumor or a certain news that is trending, they put all their money in a stock or something that will maybe
Like a crypto, yeah.
like a crypto. How has that been from an analyst perspective?
It's crazy because you see, the interesting thing about speculation is speculation has always been there since the 1600s, and it's not about to end anytime soon. Literally, it's not about to end anytime soon. And you see, the thing with speculation is, one, I usually say it's a battle of emotions. Because on the other end, there's someone who's looking at playing with your emotion so that they get to profit from you. You see, so say for example, I wake up today and I'm like, you guys, baby, this crypto is doing really well. Like buy. You see, what I'm selling to you is not even the crypto. I am selling you the urgency, and I'm selling to you the fear. You see, so to the degree to which you're willing to take that risk, you will take that risk, and you find that for people who are usually susceptible to pyramid schemes, Ponzi schemes, and the likes, it's because they heeded to the call that was being appeased to the emotions more than the understanding and the sustainability of the opportunity behind it. So because I'm either speaking to your greed or I'm speaking to your fear, because it's usually either of those two when it comes to speculative investments. So to the one person who is greed will capture them. To the one person that is fear, and especially the fear of missing out, they get caught up in that particular nest. So that's one of the things that we get to see with speculative investments. And the people who are serious risk takers and they're able to do it, and at times you're just like, okay, you do what you want to do. And they do, and some of them actually thrive. But when you gauge the number of people who actually get to profit from that and those who eventually get to lose out, it's like 1% to 99%. So it's the same way, for example, when you understand how a pyramid scheme works is, say I have this false opportunity. Then I say, DB, you bring 1 million, me I bring 1 million, and then you put this money to grow, and then the next 30 days, we will double it. And then I'll give you your 2 million back. All right. So in those 30 days, if I wouldn't have gotten someone else, I'll give you the 1 million that I have so that you have your 2 million. But I will ensure that in these 30 days, I will bring 2 other people to bring 1 million. So I'd be like, Johnny, you bring me 1 million. Rose, you bring me 1 million. So from the 1 million, I get to pay you, I pay myself. You see, and then now because I need to pay Johnny and Rosina, I get like 4 other people and tell them, you bring me 1 million, 1 million, 1 million. And that's how simply a pyramid scheme works. So the people who profit at the end of the day are the ones who started the scheme. By the time it's speaking momentum and most people have been able to now get wind of the information and everything, gets to a point that it's unsustainable and eventually you get to lose. And the unfortunate thing is that, and I always tell guys, this thing will never end. It'll never end. As long as human emotions are still in play, it's gonna be really hard to break it down. And one of the ways you override that, even in your growing in your investing journey, 2 things. One, understand the principles. Genuinely understand the principles. Because think about it, DB. If I had an opportunity that is doubling my money every single month, and I understand my human nature and the nature of my heart, why would I tell you? Why? By the way, why? Of all information, I think that will be the greatest information to keep. You see, but now you realize if I don't have to keep it and I must tell you about it, then that's already a red flag. So 1, understand the principles. 2, even just as the word says, diligent hands bring wealth, not speculation. Surely. Yeah.
You mentioned compound interest.
Yes.
Or the effect of compounding. I want to dwell on the interest part.
Okay.
Tell us what interest is and how exactly it works.
So interest is very simple, and I'll use the illustration I used earlier. So normally interest, we say this is the inconvenience fee
Okay.
that you get paid because someone else is using this scarce resource that is called money. So because I don't want you to feel bad that you have given me your 1 million and I'll return it to you in 3 years without having benefited from anything, I will give you some fee to cater for your inconvenience, and that's what we'll ideally call interest or dividends. So depending on the nature of the work that this amount is going to do and the potential returns, that is where you'll get your interest or your dividends. Yeah, and it now varies with the various opportunities out there, how they work, and what it is you're able to benefit from.
Okay.
Yes.
So now about the compounding effect. How does the compounding effect occur?
So the compounding effect is amazing because, say for example, if you start off with 100,000 today in a simple money market fund, for example, and you're getting a return of around 12% net of everything, that means that per month you're making an extra 1,000 shillings. But now you see when you cross into month 2, the interest that you will earn is not on 100,000, it's on 101,000. So the extra margin of compounding over that 101,000 is slightly higher. So when you extrapolate that to a period of 5 years without touching that amount, you'll notice that now this amount continues to grow significantly because the amount that you now have every single month moving forward is way higher because of the interest that you've earned. The interest that will be charged on that is now higher because of that other interest, and so on and so forth. So it becomes like, I know maybe hatujaiona in Africa, but it becomes like a snowball. It picks momentum over and over and becomes bigger and bigger and bigger and bigger and bigger and bigger and bigger. Yeah, that's how it works.
For a person who is willing to start investing, where do they start?
Interesting. There's so many ways, but I'll give a simple framework. So one framework is, I always say, wisdom is a principal thing. Therefore, seek wisdom. So by this I mean get to understand what's going on, what's out there, what are these things I get to hear about. Just be able to answer a simple question: what are they? How do they work? How do I make money? How do I protect my risk? If you're able to answer those 4 questions, then at least you have a starting point towards making these investments. 2, you need to have a sense of direction or purpose. So why am I doing this? Am I doing this simply to say that I am doing it because people are doing it? Because you will never really profit. We only rise to the level of the purpose to which we have asserted or ascribed to a particular thing. You see, if the purpose of this podcast was just to gain likes, the moment you gain more than enough likes, you'll stop doing it. Yeah. So even with investments, it's the same thing. If you're just doing it so that you can tell people you're doing it, you'll never grow because you'll have the illusion in your mind that at least I'm doing something, but it's not something that's profiting you. So the idea is looking at your life's objectives financially. How can this investment opportunity or opportunities help you get to this particular goal? So once you have that in place, you're now able to look at the various investment opportunities and be like, judging by the return and the risk profile of this particular investment opportunity, this can get me to this goal, this can get me to this goal, this can get me to this goal. Yeah. So once you unpack that now, again, now you assess your own level of understanding and your own level of risk taking. And you start asking yourself questions like, if I was to lose this amount, will I still continue? Will I cut my losses? Will I invest a little bit more into this particular opportunity? Yes.
What's your take on just normal banking from an investor's perspective?
I think, if I may simply put it, and to the knowledge that I've been able to acquire over the years, the whole system behind banking is a system of credit. How it makes money is you give me the deposit you have, and because I'm a trusted entity, you entrust it to me. But since I do not want to just keep this amount for the sake of keeping this amount for you, I need to loan it out to someone else who needs this amount. So you find that, say, for example, I can get a loan from a bank, say at like 15, 16, 17%, like right now in the current prevailing rates, you see. And it's okay. But again, you see, you are now the one who's paying the inconvenience to the person who deposited this amount in the bank, and that's how they get to profit. So it's really understanding that this is a tool that has been put in place to just facilitate the flow of capital. Every single thing has different uses and purposes. It's like those people who argue a SACCO is better than money market funds or better than government bonds. If you really understand the fundamentals, you see that both of them can mutually exist while serving different purposes. You see, so something like SACCOs, they're able to give you a credit facility that's cheaper than a bank. But ideally, that's not what an investment opportunity will do. For someone who really needs this credit facility at a much cheaper rate than a bank, then the SACCO is your best case. This is the best approach you can use. You see, for someone who's like, I have this pool of capital, I really do not want to do much with it, I just want it to grow slowly and silently, then investments becomes your better bet. Yeah.
I've seen a term or a terminology called ETFs. What are those?
ETFs are amazing. I was actually just watching a clip when I was on my way here around it because I've really been thinking about it. So how I can explain an ETF, maybe let me give the full term. It means an exchange traded fund. All right, an exchange traded fund. So there are three components even in that statement. So there's an exchange. An exchange is where this buying and selling of securities takes place. An example is the Nairobi Securities Exchange, the New York Stock Exchange. All right. And then you have traded and then you have fund. So traded again means you can buy and sell this particular thing. You can trade it. And then fund means different people have pulled in capital into this pot. You look at it like a pot. And then now the investment manager takes this amount, goes and invests in these particular securities. So now let's look at it this way. Now with that understanding. So I want to buy, allow me to use things that are not stock related so that we get the fundamentals right. So an ETF, you can look at it this way. I want to buy a mango fruit. I want to buy an orange. I want to buy a melon. I want to buy an apple. All of them collectively. But the price of an apple, it's like 100 bob. A melon is like 200. A mango is like 50. And then a banana is like 10 shillings. And you don't have that full amount at the same time. So what happens is the investment or the fund manager gets to buy portions of them and create it into like this fruit basket. You see the fruit basket in 50 bob?
Yes.
You know, now that's what we can call an ETF. It's a pudding, exactly. So I do not have full resources to buy the full melon by itself. But when I go and buy this pudding, I can eat the melon, I can eat the banana, I can eat the orange, I can eat the mango, for example. So when it comes to an investment perspective, you're like, I am not able to buy, for example, a share of Apple, a share of Nvidia, for example, by their standing amounts, because it's quite a lot. Because I think like the share of Nvidia right now, the US company dealing in AI and GPUs is almost $200. If you think about it, that's like how much in Kenya shillings? That's like 25,000, for example, just for one share. But now you see, it may not be significant, but see, if I have $100 or even $50, I can buy an ETF that has Nvidia shares in it, and then I get to invest. And to be honest, and I was really thinking about it, I can say that the ETF market is about to blow up in this country and even in Africa at large, because it actually democratizes investments. So for someone right now, say for example, who wants to invest in gold, you may not necessarily buy a physical bar of gold, but you can buy a gold ETF. For someone who's skeptical about Bitcoin and all these other platforms out here, you can buy a Bitcoin ETF, which basically now tracks the performance of the underlying asset, which is gold or Bitcoin or any other share, and you just get to profit from the price movements of the same. If it pays dividends, it's also factored in. Yes.
How about risk exchange? Who carries the risk when it comes to ETFs? Are you the investor or the manager, or do you have to have full knowledge of the that you're getting into?
So I'll briefly explain the structure of an ETF. I'll get a bit technical if you allow me. So there are various entities. So one, you have an ETF sponsor, and you have someone who's called a market maker. Or so I think the ETF sponsor is the authorized participant, if I'm not wrong. So what basically happens is this market maker. So for you as DB, I want exposure to, say, commodities or metals, precious metals like gold, silver, palladium, and the likes, right? So this market maker will go buy these actual assets. So buy the physical gold, buy the physical silver, buy the physical palladium, right? And then what they will do, they will create what we call a unit or a tradable unit, if I may put it that way. And so with this tradable unit, now what will take place is they will now bring this into the market, and this is the unit to which you'll be able to buy and sell, whose underlying value is the underlying physical commodities that they bought at the onset. Yes. So when it comes to risk now, even when you're gauging now, it depends, because you can have an ETF literally of anything. You can have a bond ETF, a shares ETF, a commodities ETF, crypto ETF, anything. It's just a mechanism. Yeah. So the thing you check when it comes to ETFs is for the underlying sponsor who's offering this ETF in the market and the market makers. Do they actually have custody of the securities that are offered by this ETF? So if I have, say, for example, like a tech ETF, for example, in the US, I will check this company, if it's BlackRock, for example, do they have custody of these particular securities, actual securities under their name? If that's the case, then you're good to go. Yes.
Very nice. Now let's go to the discussion of around wealth. What is wealth?
Yeah.
Is there a universal definition of wealth, or do we have our own limits where you reach and now I'm wealthy, I'm okay by this? From your standpoint,
Yeah.
what's wealth? When you tell people we are creating wealth, what exactly are we creating?
There's so many descriptions, honestly, but I think we need to separate it in this manner that wealth is not currency.
Very nice.
You see, wealth is not currency. The paper money that you have in your pocket, that's really not wealth, because that's influenced by factors beyond your control. And if some significant things were to happen to this country today, for example, the value inherent in that paper commodity that you have can significantly shift. So I think what I've come to learn over the years, and it may not be foolproof, but what I've come to learn over the years is that wealth is what you stand to profit from a place of production and creation, which can be anything. Is there a system of sustenance and a system of value that is able to generate and regenerate itself over and over again, whether you're there or not? And you see, when you even think about wealth now in that manner, there's so many things. And one of the things I learned from Miles Monroe was that there are various forms of wealth. There's spiritual wealth, there's emotional, physical, relational wealth, financial wealth as well. So that's how I would look at it. What are you able to produce? What are you able to create that is able to self-generate and self-sustain itself over and over again? That's why when you think about even what's happening right now in the financial world and the financial system, there's significant shifts going on, because right now, one of the things that people are thinking about is what's really the safest store of value to which I can be able to trade over and over. And that's why you're finding gold and things like land right now are appreciating much, because this is the wealth of the earth. It was created. Man did not create it. Therefore, it's in limited supply. You see, I can't wake up today and go and create land. I can only repackage or repurpose, same way like the Gulf countries are doing it by building like land and land banks and all, but I cannot inherently create it. It's like livestock. I cannot by myself push to grow like 5 cows in the next 1 week. Yeah.
Very interesting. So now, after creating wealth, how does one safeguard their wealth?
Interesting. Good question. I will say,
Now, give it from
Yeah.
the financial financial approach
Mm-hmm.
so that we can at least have
Yeah.
one trajectory that
Mhm.
we can follow. Because you've described that
Yes.
comes in many ways.
Yes.
So making it general of
Yes.
how
It's gonna be any.
yeah.
Yeah, I
So
totally understand.
financially, how does one safeguard their wealth?
Oh man, I think it's on multiple fronts. And allow me to just say this. One, from a principle standpoint, give and it shall be given back to you. You need to put it to work. Because the more you put it to work, the more it's going to revolve and circulate. And this is a statement I remember also mentioned at the Reclaim conference, and I said it's called cash flow, not cash hoard. The more you hoard, the more you are able to lose. The more you keep it flowing, the more you are able to have it gravitate around. So there's this scripture that most people usually find it hard to understand. Then that says, where your treasure is, there your heart will be. And what that verse basically means is where you consider the source and the sustenance of the resources that you have, that is where your heart will be, and that is where even this protection will come from. So if my understanding is the resources that I have are coming from my own doings, my own dealings, and the kingdom of God is not involved, then I am subject to this system and I can easily lose it. And we have to get that in place, because there's someone who will be like, oh, I bought Bitcoin today, or I bought Safaricom shares today, and then they dipped in the next 3 weeks. Wow, huyu ni shetani mgani? My village people are overworking, and very many statements yeah, that they say, like, mbona sa ndo market in underperform, you see such kind of a thing. But the moment you first of all have, and even for me as an investor, but it was really crucial to understand it, that in as much as I can safeguard, check the mechanisms put in place, there's regulation and all that, I have to understand that the source is not this. The source is the kingdom. So even if I was to lose everything today, I am still plugged into the kingdom where I can receive this resource. Right? And so now when we come now to our day-to-day, definitely one of the areas to look at is, even from a prudent standpoint, the entity to which you're investing in, are they regulated? Are they well known? Can you be able to audit and trace their progress, their performance, their business and moves, for a period of time? What's the history of their management? They have a track record of doing all these things. And again, remember what I was saying about understanding how these opportunities work. Because when I tell you that this is how shares work, and you see, say, for example, like last week, KPLC shares were around 15 bob, and at some point this week it was almost 12 bob. What does that mean? You see, how does that reflect like when it comes to your loss perspective? So for the various investment asset classes that are out there, they have different components and measures of risk. But the more you understand them, the more you're able to know that I can only do this much because this is a much amount of risk that I can undertake. Yeah, so just to summarize that, one, understand your source, the kingdom. Two, in a general level, you need to check regulation, things around custody, who's the custodian of your funds or the investment assets that you have. And then now three, you go now down to the risk level per investment asset class. Yes.
Let's talk about trading.
Mm-hmm.
There are some murky waters there around that whole terminology, trading.
Trading, yes.
Because there are people, one, have fallen into scams, and others are losing their money just because of that word, trading. Others, they are forex trading, others shares trading. Well, what is trading?
Trading is very simple. It's just buying and selling. Me buying bananas in banana and coming to sell them in Runda, it's trading. I am buying low, selling high. Me going to buy milk in Kinangop, coming to sell in Ruaraka, is trading.
Yes.
So most people usually feel like it's not legitimate, but it is legitimate. And the trading industry across the world, especially in the global markets, is huge, to the trillions and trillions and trillions of dollars. But most people really get into it without an understanding of how it works. You see, also when it comes to banking, that you asked about banking, there are two ways that banks make money. So one, banks make money through interest income. Interest from the loans they give. You went, you're like, you can take a mortgage, you can buy a car, financing, business financing. The second way is what we call non-funded income. And under non-funded income is where they can invest in government securities or through trading, pretty much FX trading. Because you see right now, if you want to change dollars to cash, like for large transactions, maybe for international trade, you will ideally go to a bank. So that brings even the legitimacy of that. But what most people forget now when they get into it, there's something in investments, and sorry to most traders, but I'll just say it. There's institutional money and there's retail money. And retail money, for the most part, it's called dumb money. So dumb money to mean that you do not fully understand the bigger picture and the power or the ability that an institutional trader brings to the market. So say, for example, you want to trade like currencies. You want to trade like the dollar, euro, for example, and you have your little 10,000 over there. But an institutional investor comes and they're like, we want to trade like $500 million today. You see, when they bring such an amount of capital into the market, it's going to skew it to their favor. And they will gobble up these retail investors who may have the understanding but not the power to leverage and will be able to profit from that. So I will say, one, yes, it's legitimate. Trading is a viable way of even creating income. But most people need to break away from thinking that this is just another thing that I get to do that will make me rich quickly. And look at it that this is actually a solid skill set that I can build over the years, that I can use to understand and be able to grow an active line of income, for example. Yes.
So what I'm getting is trading across the board follows the same principle of buy low, sell high.
Yes.
Very, 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 very fantastic.
Yeah.
So now, how does one get to lose their money?
Multiple ways. I think one, when you don't understand what you're actually trading in. So for example, if you're trading currencies, there might be, so there are two things, and I'll say the first one. So the first one is there are these macroeconomic events that will push the direction of a certain currency. A good example this year was when it came to the US tariffs by Donald Trump.
Yes.
And for the most part, what was happening at that moment was that, hey, now guys are like, maybe the dollar will weaken. So someone who is trading will ideally take up a position that they'll be able to profit from another currency that will strengthen vis-a-vis to the dollar weakening.
Yes.
You see, there's that understanding. But again, also too, right now we have a lot of what we call high frequency traders or algorithmic traders, where they move multiple trades in split seconds because it's now a computer doing it and it's not necessarily a person. So by the time you're done analyzing the charts, analyzing the markets, which can, depending with the level of your skill, can take you from like 5 minutes to even like 2 hours, 3 hours, there's someone else who just by the click of a button had already executed this particular move because a quantitative model predicted the move. You see, so that's one of the areas where you can lose. You can lose through speed of execution. Someone executes faster than you. But most importantly, too, it's where you're actually speculating. You're just like, let me see what will work. Maybe this will work. Maybe this won't work. And you see, that's also, it speaks now to that deviance of knowledge. Probably knowledge is not there or an understanding is not there, or even just pure greed. Just like, let me see what will work. It's like scattering seeds all over and be like, let me see the one which will be able to grow. And that's why in the trading community, it's always advised, one, understand the opportunity or the asset class that you're investing in, understand the movements in it. Two, understand the fundamentals. All right. And three, now discipline yourself. What's the strategy that you're using? Are you trading across time zones? Are you trading a particular direction? Are you trading against institutional investor moves? So the moment you have your strategy locked in, now you're able to consistently profit. And that's why, especially in trading, we say that focus more on a proper execution of strategy more than profits. But most people actually lose money are the ones who forget the strategy and be like, I just want to profit. Maybe I can make, that's speculating. You're not really understanding the fundamentals. And eventually you lose. And someone who's patient enough, they're able to gain. Yeah.
From where you stand, what are we missing in terms of our own understanding, especially as Kenyan youths, this terminology for forex trading? Because the only side we are seeing of forex trading is the lifestyle and all that. What exactly are we missing? Because you've said it's a value
Yeah.
thing.
Yeah.
What are we missing?
I think it's the way it's been sold or packaged. And you're noticing that someone is like, wow, because I want to get a Benz by the time I'm 25, so that I go and I've lost to my village people. Onyeshe vile wewe ni mtu successful kule mjini, you take that particular approach. But again, I will say it's an understanding of the system and how it works. To be honest, DB, if we were to just go out with you right now, just across the street where this studio is, and we just get like 15 young people and just ask them, Niaje, how does money work and how does the financial system work? I can bet only one and at most none understand how it works. And I will say that's the gap. Most young people don't really understand how the overall financial system works because this element of trading, be it forex, be it crypto, or all these other things, it's just but a component of the overall movements in the system. You see? So that's what's missing. So that's why you find guys come in and like, I don't know how this thing works, but you just take my money, make me rich. It doesn't work that way. And I will say that's the fundamental gap that's missing.
There's something I see in the market.
Yeah.
Market drops specifically. When
Yeah.
the market dips, it's mostly due to maybe a political announcement, a trade deal. Or
Yeah.
what happens when such things occur, and how does it directly affect the market? Going up or going down?
Yeah, that's amazing. And again, multiple layers to it. You know, it has a lot of like permutations and combinations to it. But again, fundamentally speaking, any news, be it political, financial, will affect this flow of capital. And that's what will lead to prices going up or prices going down. So say, for example, looking at the US tariffs, for example, Liberation Day back in April, Donald Trump wakes up one morning and is like, all these countries, tariffs, 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 tariffs. So guys are like, yo, the US economy might struggle because these entities that are importing will have to pay more to bring these goods to the US. So what does that mean? It means that fundamentally businesses in the US may not necessarily perform well as we anticipate. So what does that mean? It means that if I had 100,000 invested in this company and their business might struggle in the next 6 months, I would rather sell now, preserve my cash so that I'm not affected by underperformance of the business in the next coming months. So that selling pressure, what it does by multiple people, now leads to the market dipping. Yes.
Is it also the same law of supply and demand?
Exactly. It's pretty much that. Because you'll even find, even in such a market, say you have more net sellers than buyers. Eventually the price is going to go down. Because you want to sell this tomato at 20 bob. Someone's like, hey, me, I need my money now. I'm willing to sell it at 18. Someone's like, hey, even me, I need my money now. I'm willing to sell it at 17. Even me, I need my money now. I'm willing to sell it at 12 bob. So someone will be like, hey, okay, now the price of this fundamental asset is going down. And now if you really want to sell it, maybe a buyer will come and say, seems you guys are really frustrated. I will buy at 10. And the most frustrated of them all that's selling will now come and say, okay, Shika, I just need my money. I'll buy it at 10. So that's now what leads to market drops. And you see, even when it comes to trading, you need to understand the fundamentals behind that so that you're able to understand where will this particular asset move to. Yes.
You know, right there, you've just given me a full masterclass of just understanding. I was seeing this terminology of an ask,
Yeah.
an offer.
Yes.
You just broke it down
Exactly.
in a very simple way because I was failing to understand how does this other this guy for the federal whatever
The Federal Reserve. Yeah.
When that guy says good morning,
Yes.
the market drops.
Exactly.
I have never understood.
Yeah.
And there's a time he will come and the way he greets people,
Yeah.
the market shoots up.
Yeah.
So it's speculation of the people. Now, okay, whatever news the Federal Reserve will bring,
Yes.
will either affect the dollar or either commodity or
Exactly.
that's very interesting.
And it's amazing that you bring about the Fed, and maybe if we can speak about that, because again, remember what we were saying at the initial stages, and I was very intentional with not using jargon, because when you understand again the flow of capital, when you understand this entity that's called a central bank, leave even your bonds, understand what this entity called a central bank is and what they do in the market, there you'll have understood like almost half of what goes on in the investments world. Because the central bank is what pretty much governs the flow of capital in an economy. So in the US, say for example, the Federal Reserve is what you can say it's the central bank of the US. And it's fundamental because of two things. One, US, their current state as quote unquote, as a superpower. And also two, the state of the dollar as the reserve currency of the world, which means that it's safer and it's what's usually used in trade from the most part. So there's this interest rate that governs the lending of money from central banks to other banks and banks within themselves. It's usually called the central bank rate, or in the US, it's called a Federal Reserve rate or the Fed rate. So when the chairman of the reserve of the federal bank in the US comes out and says, we are lowering rates, that has a significant implication. And to simply explain what that means is when they say we are lowering rates, it means that borrowing is going to be cheaper. And since it's cheaper, normal psychology, I can now borrow more, and it leads to more money being in the economy. You see, and the vice versa happens. When they say we are raising rates because they want to stifle money supply in the economy, so lending is going to be higher and certain assets will profit or not profit from such a movement. Yeah. So the moment you understand that, that affects every asset class in the world. It affects bonds, affects shares or stocks, it affects currencies as well. So you're able to see. So even for someone who trades in FX, but now no other people will call it forex or currencies, they'll know that so if the Fed lowers rates, this means that probably this economy will perform much better. Here I'm just using absolutes. This economy will perform much better. So the dollar is bound to strengthen because probably the US will be able to export more. So what will they do? When I'm now trading this currency, I will trade from a standpoint that the dollar's value will appreciate and the relative currency will depreciate. And that's how people make money.
Very, very interesting.
Yeah.
So now, when people stand and say there is no money in the economy, you're talking about
money goes where it's needed. Money goes where there is value. Money goes where it knows it will get a return. Money has a personality. I think by the virtue of being in the fund management industry for these few years, I can tell you for a fact. This Kenyan proverb, we say that Kenya kuna pesa, ni wewe hauna. That thing is real. I can assure you that thing is real. That thing is real. And it's because, again, when you understand this fundamental principle, there's someone in need of this resource, hard-earned resource that you have. They will look for you wherever you are, for you to give it to them, and they will compensate you for that, what's it called, inconvenience that you have attained by giving that capital to them. Yes.
So essentially, when you lose your money, you've lost it to someone.
Exactly. Exactly.
Or when there's no money,
yes,
it is somewhere that is needed.
Yes.
Or somewhere that is well deserving of the
exactly
of that money.
Yes.
Very interesting. Pesa kunazo ni wewe hauna. Essentially.
But kweli, like it's a hard pill to swallow, but I can tell you for a fact that's the absolute truth. Because you see, this thing called money follows this thing called value. So if I come, DB, and I say, honestly, I am looking at hosting an event, and I need to do a really good event from a media standpoint, I will come to you and I will tell you, I am willing to pay you a premium only if you can help me get to this particular objective. Even if you are struggling with your clients who are 2K, I have a better person at Anfanya na 1,500, surely, But when you think about it, to the level to which you're able to offer this value is a level to which this capital called money is able to flow to you. Because it finds essence, it finds fruitfulness, it finds productivity in what it is you have to do. That's why the one thing you're never bound to chase is money, because money is supposed to follow you.
Amesikia hiyo?
Rather, it's supposed to follow you forever. It's supposed to follow you. If people are not at a place where they're like, but they can pay you a premium to do what it is you're doing, then you need to probe and you need to continue building capacity to get to that point. Because at the end of the day, people have problems and they need solutions. And then, like, for the convenience I will get by offering this solution, bro, like, just take my money. Like, shika, do what you need to do as long as you get me to this objective.
Wow. So now, how does one build a good relationship with money?
Good relationship. Interesting. So, one, understand the source. I will really say that, understand the source, because you see, money is powerful. Money is the one thing that was, if I may loosely translate it, equated to God. Not even the devil, money. Because it says, the Bible says in Matthew, you cannot serve both God and money. One or the other. So you have to understand that my source is the Lord himself and not this resource called money. Because again, think about it. Again, in the word itself, it says that money answers everything.
Yeah.
DB list every problem you have. Every. Every.
There's a clip I saw from a movie.
Yeah.
A guy saying, if money can solve a problem,
Yes.
more money can solve
Exactly. If 10,000 can solve it, I can assure 1 million will solve it, and you'll have extras to it. So that's the first standpoint. Two, now the moment you understand the power inherent in money, you now need to check and probe yourself. Which vulnerabilities do I have that the power of money can feed to? You get? Yeah. So, for example, someone who's devoid of affirmation or attention, money can give you attention and affirmation. And that can skew your relationship with it.
Yeah. That is why people are buying everything.
Exactly.
Well,
because money has power. It's able to do it. If I'm called a billionaire to the hundreds, not even at 1 billion, to the hundreds of billions, there's a certain class in this country that will want to associate with me. You see? So it's the same principle. And when it comes to relationship with money, you need to check on those areas. And that's why, and I'm grateful that now we are having these discussions, that you cannot separate money and even traumatic experiences that you've gone through, because there's so many people who are trying to patch up the gaps in their soul with this thing called money. So you think that probably I need an extra 100 G's so that I can feel better to myself, and yet it's just a wounded soul that you're working with.
Does that mean money exposes you?
Oh, yes. This thing is powerful, man. I don't think we really fathom or understand the power that is in money. Money is extremely powerful. Extremely. Extremely.
No, that's very interesting.
Yeah.
It's giving me, you see, those light bulbs in terms of understanding even some few things I've seen over time, because people don't just wake up and change. It's inherently in them.
Yes.
Now, money as the facilitator
Yes.
that has come to blow up this.
So that's why we say, beyond even looking to be rich or wealthy, really deal with your heart. Will you change if you had more? Which are the things that are craving for more, that when money comes, it will cause you to take another direction? And that's why, especially when it comes to kingdom wealth, it's something I'm learning right now, even as a young person, that the Lord entrusts you to the degree of your yieldedness and the death of self. That is like, now this thing will not cause you to change. Now I can entrust more of it to you.
Very interesting.
Yeah.
This conversation will not put a full stop, we'll put a comma, because definitely we've tackled a little bit of the technical.
Yes.
I would want us one day to sit down here and analyze a whole industry.
Yes.
And see how it works.
Yes.
Personally, I've gotten to steal a few nuggets here and there in terms of money, your relationship with money, and also matters of kingdom.
Yeah.
So Teddy, as we finalize this, we have an event that is coming up on 29th.
Yes.
But before that, we have a masterclass.
Yeah.
Talk about that masterclass and what it is all about.
Awesome. Thanks. So I have a masterclass coming up on the 8th of November at Mocha Spaces. That's in CBD from 1 p.m. to 5 p.m. And the whole essence of this masterclass is you've been hearing about all these things: unit trust, money market funds, shares, bonds, equities, and a common catchphrase that's right now in the market. If you invested 100,000 at the beginning of the year, this is how much you would have made. And I believe, and I've noticed that for the most part, when we speak about investments, we speak after the fact, but most people are not equipped on how to prepare for the opportunities to come. And that's what the whole masterclass is about. So the masterclass is titled Passive Income, Building Family and Personal Portfolios. And it's basically helping you, which are these tools that are present and available to help you build this pool of, remember from our earlier discussion, passive income on a monthly basis that's able to take care of part of your full expenses as a person. Yeah, so for that 1 to 5 p.m. slot, it's a 4-hour masterclass. So that's what we'll be looking at. It's really beginner friendly. So we won't dive into the jargons, because also in the financial space, you cannot unpack it completely in one sitting. Yeah, so that's what you're going to look at. Which are these various investment asset classes, various investment opportunities? How do you work with them together to create for you this line we call passive income that's now able to take care of you moving forward?
On board for that event.
So with this one, you can check out on my socials, either TikTok, I'm on Finances Africa. Instagram, you can check Finances Africa, or Teddey Muthoka, my own personal profile. Facebook, the same, either the two. And there's a link that's over there where you'll just get to register, and then you'll just get to receive your details for the event, the tickets and everything, and we'll just have you present.
Oh, ladies and gentlemen, that has been Teddy. Definitely, we're going to have you on that seat for quite a couple of
You're most welcome.
Because we need to understand. Personally, the journey of money,
Yes.
it's from a healing perspective.
Yes.
Because
Crucial.
there are so many things I didn't know about money.
Yeah.
And looking at it is from some things that I have experienced.
Yeah.
Tied to money also.
Yeah.
So we're going to continue with this conversation on another episode if you allow us.
Gladly.
Because of time. In regards to the event that we have on 29th, he's going to be one of our speakers, and he's going to talk about a few things when it comes to investments that are tailor-made for businesses, not just personal. The reason why we've talked about money in a personal level at this moment is because if your business is a reflection of who you are.
Yes.
So if you don't deal with your money situation as a person,
it's going to be hard.
It's going to be hard also on your business. So grab your ticket at business.co.ke/events and programs for the business event. Also for finances, personally, I'm going to be there.
You're welcome.
And I'm going to get my two guys their tickets.
Hey, please, yes.
To
learn.
Yeah, so that you can learn. The dates.
Date is 8th November.
8th of November.
It's a Saturday.
Yes.
Yeah.
Grab your tickets pia. Tupatane pale. Tujue mambo mbili tatu kuhusu biashara.
Yes.
And until the next episode, my name is Daddy Blessing. See you in the next one.
See ya.